everyone, and welcome back to Kuvera Insights, where we talk to industry experts about how to manage your portfolio, how to get better returns. Today, we continue the conversation with S. Naren. To those who don't know him, he's the CIO of ICICI Prudential AMC, has about 30 years of experience in financial services, ranging from investment banking, fund management, equity research, and stockbroking. So, without further ado, let's start with our conversation with Naren. So now coming on to a lot of things that you've said, right? Like people have to be invested in all asset classes. All asset classes are equally important, and you've always been a big champion of balance advantage funds, which does some of these things. But just to simplify, what is a balance advantage fund? How does it exactly work?
See, basically, I was a fund manager of an infrastructure fund in 2007.
Right.
And I went through a very agonizing process that I got money in 2007. Investors lost money in 2008 in that fund. And then in 2009, the market rallied. Almost no one made proper money because in 2008, they just froze. No one invested in the infrastructure fund in 2008, particularly after Lemon till 2009 election. So I went back and asked my CEO and said, we should create a product where automatically people invest. We invest for them when the markets fall. And then we disinvest when things seem to be great. And we should toggle between equity, debt, and arbitrage in a way that, we should not have to go to the customer every day and say, give me money when the market falls, give me money, give me money, give me money. Because that model didn't work in 2008. In 2008, after Lemon, I did so many events all over India. I told them, in those days, Big Bazaar sale was the biggest. There was no Flipkart, Amazon. I said, Big Bazaar sale is going on in the equity market. Give me money. They said, no, I don't know when your sale will end, so I'll give you on the last day of the sale. So I told them, I don't know the last day of the sale.
No one knows the last day of the sale. That's the whole part of
problem. So I realized that's not possible. So after that, we created this entire strategy called Balanced Advantage Fund. I thought the product won't be so successful because people like, in India, people like equity. But then after that, I realized you had this European financial crisis in 11. In 2013, you had a taper tantrum. In 2015, you had a China problem. Then after that, for a brief period, markets were okay. Then you had Demon. Then you had GST. Then you had ILFS problem. Then you had Divan problem. And last year, you had COVID. So what I realized is in all these crises, we were buying equity in that strategy. In normal periods of time like 2017, when the markets were rallying, we were selling equity in that fund. So it turned out to be a strategy where without going to the investor, we were actually doing what we think rational, which is markets going up, we sell, markets going down, we buy. And periodically some crisis comes, which you and I cannot predict. Could be a predicted COVID? No. Could be a predicted European financial crisis? No. Could be a predicted taper tantrum? No. Could be a predicted demon? No. So could be a predicted ILFS timing? No. So what I realized is this is absolutely great for any long-term investor. The investor gets better return than even equity funds or almost same return as equity fund, but at much lower risk. And we're doing rational thing. What is rational? Buying equity when the market falls, selling equity when the market goes up. The residual money is invested in arbitrage and debt. What do we have to do? We have to have a team to do it, which is very easy for ICICI to do. Because we have got a big team, we need to have arbitrageurs, we need to have people who can buy debt, we need to have people who can sell debt. So if you look at what the fund did last year in February, March when COVID peaked, it's just unbelievable the quantum of money we deployed. And that is simply at the heart of the scheme. So at the heart of the scheme, we believe markets will be volatile. Now I'm convinced that someday next year after, Fed will do something, they'll increase interest rates, markets will fall. We'll get an opportunity to buy. Before that, we would have sold, saying we don't know why the market is going up. So at that time, we'll use that money to buy. So it's a simple framework for long-term investing.
So the best part is that it is tax advantaged.
Yes.
All of this rebalancing that Naren is talking about, and that's the asset allocation rebalancing, happens in a tax advantaged account, which if an investor were to mimic on their own, they would first of all, like Naren also said very eloquently, they would freeze when the markets fall because they'll be so scared and they would want to deploy in the last day of the crash. And more importantly, you'll have to pay taxes. So when equities are up and you're selling, you'll have to pay capital gains, which the fund does not, right?
And we always, a lot of people used to tell me, can you run it as a 2,000 crore fund? Today, that fund has become 30,000 crore, but if we had it at 50,000 crores also, last year we could have managed. And
right.
The beauty is, imagine last year, if we had to go collect money in the middle of a lockdown, it wasn't possible. But the fund did not have to collect money. All we needed to ensure was one dealer had to reach office, 3 people had to reach office in time. Then the orders could be executed. So those 3 people reached office in time. In fact, we put 2-3 people next to the office in a hotel so that they would reach office. That's all we needed to do. Otherwise, just imagine how do you go collect money from investor on March 22nd, March 23rd, March 24th last year.
No one was thinking about it.
Like it's impossible.
So for a young investor, right? I mean, some of these points you make, they're very obvious to me. They're very intuitive to me. I understand this. It's an asset allocation framework. It follows a plan. It follows it rationally, like you rightly said. It is tax advantaged. But think about a lot of these new investors who are joining the market, right? They want something shiny and new. They want a Tesla. They want like 10% returns every month or whatever it is. They're chasing these hot stocks. How does one convince that this is actually a much better vehicle to start investing? Because you're getting a lot of these benefits of auto rebalancing, you're getting some debt exposure. How does one convince them? Does it only happen through investor education, or is there something else that can be done?
No, it can't give you 10% per month. So
no one can. Point is, that's what they chase. I'm not saying that's what gets delivered. I am with you. I understand there is but that's what people chase. That was my point.
See, that is a challenge that is there, I was just looking at the data. Last 1 year, 15 lakh crores has gone into bank deposits.
Right.
4 lakh crores has gone into cash.
Right.
So that 15 lakh crores which has gone into bank deposits has yielded a return of 4% or so average. The 4 lakh crores which has gone into cash has yielded a return of 0. Yep. So that 19 lakh crores has yielded a return of weighted average return of 3%.
And this
so
is just
no
the
one
flow.
Is talking about that.
This is just the flow. This is not the stock of what already was in a bank account.
No. This is just the flow. This is data taken from RBI website. Right. I'm not giving you data which is in doubt. This is taken from Reserve Bank of India website. Data. This is accurate data. 19 lakh.
That was not my point. My point was that this is a flow data. This is the additional amount of money that has gone into these bank accounts. These bank accounts probably already had many lakh crores of rupees already in them.
Yes. So, I would say that if they can collect 19 lakh crores, why can't I didn't collect even 19,000 crores. So I believe, the reality is, see, what is the risk here? People think that this is a capital guaranteed product. This is not a capital guaranteed product. It is a product which makes use of the fact that you buy as the market falls and sell as the market goes up. But still, it is not a capital guaranteed product.
How did this perception come into place? Because it's clearly not a capital guaranteed product.
No, but it doesn't. But see, we don't see through a platform like Kuvera, we have control on communication. Now you're going to put it up in your website so people hear it without a filter. But it doesn't always happen without a filter. I mean, just think of so many conversations happen without a filter, without a filter. So what happens is there's someone who says, no, you will get always 8%, whether the market goes up or not, it will give you 8% per annum or 10% per annum. That's something it's outside my thing.
Fair enough. And that kind of then creates its own perception problem. Is that what you would call that?
Yeah, it would. But frankly, at the end of the day, I believe, if there is a product which adds value to investor and can add value to a multiple number of people who think they can't get 10% per month, then for all those people, it is worthwhile.
Fair enough. No. So I've had this conversation a lot of times internally with colleagues also. I think for new investors, this actually is a great product because, um, as I see it, right, and I mean, I've not invested through the 90s. I started my investing journey only in 2000. That's when I graduated. So, but 2008 crisis happened, and I was actually trading in New York at that time, right? The biggest risk that we see for the younger cohort, right, that is the 20 to 25-year-old, is that their first crash, they will lose so much money that they will stop being an investor forever. So it's for that short-term gain, they are kind of losing out on a lifetime of compounding. So a product like this ensures that they will be long-term investors. Right? I mean, like to really make money in markets, you have to be a long-term investor.
Exactly. Absolutely. Absolutely. And that's what I keep telling people. In India, there are so many people trading derivatives. I get damn scared. I don't know whether they know everything about derivatives market. Here, at least I'm telling you, this is what you can do. And here you have people who are working for you. I mean, but I worry about all the people. We have one of the largest derivative exchange in the world. So if we have the largest derivative exchange in the world, I worry whether all the people who are trading derivatives in India know about the risks of the derivative markets or not. I really worry sometimes.
It's fair enough. I mean, single stock futures in India are so popular, and it's mostly speculation. You're closing your positions every day, so anyone's guess, how much of it is informed money, and that's the other thing. In a 10-year bull market, everything looks like informed money.
Yeah, exactly.
It's when the 2000s happen or the 2008s happen, that's when you differentiate on what is an informed money and what is kind of speculation. I mean, I remember seeing this data about so China actually peaked around 2007. The 2008 crash didn't affect them much, and there was this data that was published, I think, in 2009 or 2010, that looked at stock investing accounts in China. And 2005, 2006, 2007, the accounts just exploded. And then the market crashed, and about 70% of the accounts that were created in the last 2 months didn't trade for the next 4 5 years. So they got so scared, they got burned, and they got so scared that they lost on the entire 2009, 2010, 2011. I mean, it happened in 2008 as well. A lot of people who lost money only came back in 2013, 2014. So, anyways, I mean, I think we can keep going down this path, but just one last question before we wrap up. What's the reasonable outlook for Balance Advantage Fund now? So, is it that things are unpredictable? There is volatility coming. There has been volatility. There will always be volatility. Hard to predict what's going to happen. So, best is to be in a framework that auto balances.
I think the more the volatility without very big sustained falls is best for the fund.
Okay.
Right. On the other hand, if you have no volatility and if the market just keeps going down, that is not necessarily very good. But if you have periods like, what you had in the last 1 year, market went down, then went up. If you have those kind of situations where the market gives you moderate return with volatility, that is the best situation for the fund.
Understood. A V-shaped recovery is really good for Balance Advantage Fund.
Exactly.
Perfect. Thanks so much, Naren. Thank you so much for speaking with us. It's been a pleasure.